I welcome you to this program where we will be talking about public banking. I'm pleased to say that we have with us two of the specialists, national specialists, who represent the Public Banking Institute, which is the most important institute in the United States to explain and to support public banking in this country and around the world. Ellen Brown is the founder and Walt McCree is the chair of the board. Let me start by asking the two of you a very general question. In this morning's New York Times, it was reported that 2016 was the hottest year ever recorded on the surface of the earth. In mentioning the significance, the New York Times said that this will involve massive changes in how we live and actually could threaten human civilization. Public banking is part of a major changes that are occurring around the country in all the different sectors. And I wonder if you could first begin by locating it as part of this broader change. In a sense, it's the question, what motivates you to be involved in this particular kind of work as a part of a broader movement toward an ecological civilization?
Okay. Well, the Public Banking Institute was founded in early 2011. Our purpose and goal is to establish publicly owned banks on the model of the Bank of North Dakota, which is currently the only state-owned bank, a state-owned depository bank in the country. Actually, California has the California Infrastructure and Development Bank, which is also state-owned, but it's not a depository bank. And in fact, that's one thing we're working on right now, is possibly expanding it to be a depository bank. But as you point out, we're at a point of major change. We've come to the end of the debt-based model for finance. That the banking system we have now, in the banking system we have now, banks create all of our money. Virtually all of the money supply comes from banks, not from governments, contrary to popular belief. The only money that governments issue are actually coins. Really, it depends on whether you call the Federal Reserve government. It is 100%, or the Federal Reserve banks are 100% owned by the banks in their district. But even if you include Federal Reserve notes, then it's 97% of the money supply consists of bank deposits, which are
for people who are looking for new kinds of collaborations across the sectors of society. How might the resources of public banking make it possible to do new types of agriculture or new types of education? How might it have spin-off effects across multiple sectors of society?
Well, one of the things that you led with was, where does this fit into the evolving ecosystem of the environment? How does money impact, and how do the changes in the structure and the exchanges of money impact the future of the planet? And what we have to acknowledge is that the profit motive, the need to pay off debts, the need to service the money mavens or the money masters, drives an economy into the kind of sectors that are unsustainable. So you see the pursuit of minerals and extraction and exploitation of the planet become mere tools in a monetary system controlled by private interests. Public banks speak directly to that, because it gives a chance for the people and the people's intentions to be able to be realized with access to money and credit, which they need to build these new economic models and new economic possibilities.
That's really helpful. I wonder if you could start with the example that Ellen already mentioned, the public bank in North Dakota, and show how does it have some of those effects that you just described, Walt? How can it make funds available for local projects or farmers that wouldn't otherwise be possible?
Well, when the people control the mission, and they do in a public bank, every public bank has a mission, and the people hopefully will be the ones, the stakeholders' interests, who define and describe what the bank is intended to do. So public banks that we envision will be able to fill the void of commitment of capital to those sectors that we want to see developed, like renewable energy or affordable housing, a variety of environmental developments and improvements, agriculture and small farms. You know, the Bank of North Dakota was started with the idea of supporting agriculture, of course, because most agriculture was mostly agriculture back then. So the idea is to return the power of money to people to support their interests. And there are many new interests that need to be funded that will not be funded from Wall Street. Yeah. Because the current economic model is, how do you profit by building X, Y, Z, which is, we've never, you know, in other words, if there's no profit, you're not going to get any credit. And even small businesses represent that now. I mean, if you can't get a small business loan from major banks, and the major banks are about the only ones that are left in the communities. So another important part of this is that public banks partner and support community banks. Community banks, credit unions are on the front lines of lending money into the communities that are going to bring these new economic prospects forward.
So let's get concrete for a minute. Alan, do you have any examples of what the Bank of North Dakota actually does? I mean, anything really concrete that would help folks understand what the theory means in practice.
Okay, so if I could just sort of finish what I was starting to say. So banks create money, and then it's a parasitic model. They rent it back to us, and they suck a major portion of the profits out, and it goes into this other economy, this speculative casino economy that the money never makes it back into the real economy. So if we, the people, own the banks, we can turn those profits back into the community for community purposes. So that, for example, right now we have an infrastructure proposal for $1 trillion infrastructure investment over the next 10 years by the new administration, but they would do it by private equity, which expects a 12% return. I mean, these are returns from users because it's private, but it's still we, the people, that are going to wind up paying. The Bank of North Dakota does 2% 10-year infrastructure loans, which is remarkable for their local communities. And they do, for example, in the end of 2015, when you had a major oil bust, so it was not like they were getting their profits from oil, they were making 1% loans for building schools. Here, we're in California, there are counties in Orange County, there are cities in Orange County that are paying at like 15 times principal. They'll wind up paying by the time they pay off these capital appreciation bonds, which is their only recourse for funding school infrastructure, and they're getting those from Goldman Sachs, et cetera. So that's what you do with your own bank. Leverage your own money for your own purposes, and the profits go back to the community.
It's really helpful to see those concrete examples. Where do public banks get their capital? How are they capitalized in order to make loans?
Well, the Bank of North Dakota was capitalized with a bond issue in 1919, so the model is a bit old. What we're proposing, if you want to keep it as a public bank, so you obviously don't want private shareholders, but what you could do is capitalize it with the pension funds if you don't want to go into debt. You could do a bond issue, but California is already in debt, and we're reluctant to go further into debt. So another option is get the pension funds. They expect a 7% return, but that's very doable. You could give them 7% guaranteed dividend, but they're not going to be the owners. You're going to have to sort of tweak the law there. They're investors, not owners, or they can be owners, but they're not voting. They don't have voting rights, rather like the Federal Reserve banks. So give them a guaranteed 7% return. Then for deposits, you can leverage that capital by 10 to 1. That's the advantage, the beauty of being a bank. You can leverage your capital at 10 to 1, but then you need that amount in deposits. So I would recommend, for example, pulling deposits out of the pooled money investment account, which is where all the rainy day funds are for the state of the various agencies. And they are currently earning 0.5% interest, very, very low interest. So pay them that. But these are just deposits. We're not talking, that's not capital. That money stays in the bank. It doesn't go anywhere. But you are allowed to make loans equal to your deposits, less 10% requirement.
Now, is it true that in North Dakota, state funds actually back up the public bank? That what the state holds is, as it were, held by the public bank? Did I get that right?
All the state, yeah, by law, all of the state's revenues are deposited in the Bank of North Dakota. Now that might be a little tricky to pull off, like in California, because everybody will be nervous about that. So I would suggest that we start with a modest pilot project just to show how profitable this venture can be, and then you can expand it and expand it.
Phil, if I may, I'd like to interject also about the capitalization, because a lot of people wonder, well, how, our city's broke, our budget, we don't have any money. Well, that's generally not the case. Municipalities, cities, and states typically have money that they stash, they put off to the side for a variety of reasons, like a rainy day fund, for example. Should something happen, they've got money on deposit, or other special funds that are controlled by their financial departments. So there is money that's available, probably already existing inside the community, that can be used as capital or the reserves, upon which then you're able to build the lending capability. But there's another example I think that I personally like to see. And we talk about, as Ellen said, we keep it in a public bank, you don't have shareholders. But I think to start a public bank, it would be kind of cool to allow the local citizens to be able to participate in a one-time offering of a one-time and fixed investment, fixed return, to help to capitalize their local public bank. Because the idea here is to bring the community together, to use the community resources, and let the people benefit as bank investors, basically on a fixed return. I mean, it's just one possibility. There are many others.
So that's an amazing concept from the standpoint of community building in multiple sectors towards sustainability. Can you, either of you, say a little bit more about how a local bank or a municipal bank might actually help to build a kind of community, of civil community, of the sort that seems to be largely lacking in our society today? It's a powerful notion.
Yeah, well, one of the things that's so really transformative about the public banking option is that for the first time, it puts the power of money into the community's hands. And again, as I mentioned, the public bank has a mission. It's not a mission like normal commercial banks, where it's to maximize profits. The bottom line of it is benefit and value, and creating benefits to the community as defined by maybe new jobs, or a better common assets, better environment, or more affordable student loans, or lower cost infrastructure. Those are all important objectives that right now we don't have access to, because we have to borrow the money or pay taxes to be able to get those things going. So in that way, the public bank becomes a repository and a depository for public wealth and public intention and objectives to realize something new for the community, because it's in their control for the first time.
That's a powerful notion. So Ellen, suppose that somebody wanted to take an initiative in, let's say, a small municipality to found a public bank. Can you describe the steps that might involve? I'm going to ask others on the call to please mute themselves. We're getting a lot of background noise.
Yeah, I was trying to do that too, but I couldn't. So you don't want to be too small. You're going to need to capitalize a bank. For example, in California, you need $20 million. So if you're smaller than that, what you could do is join with other communities. And there are certain advantages to that. It's called the Joint Powers Authority. And the bank that you set up through your Joint Powers Authority actually is going to be a separate institution, publicly owned. But if it goes bankrupt, it is not a liability of the cities. So it would be rather like a 501c3, rather like our nonprofits that aren't owned by anybody. But it's public, and that's what they have in Germany. The Sparkassen banks are similar to nonprofits. They're not owned by anybody, and the advantage of that is that nobody can sell them. I mean, you can't have politicians that go into debt and are talked into selling off their banks because they don't actually own the bank. So in fact, there was a lawsuit about that where somebody tried to sell one of those banks, and I said, no, it's not for sale.
So let's carry it on from that point. We have a municipality. We have $20 million in assets that we've drawn together. We realize it's not owned by the city so that the money can be stolen. Then we do the legal work to found it. And then how does it get going? How does it build business, as it were?
Well, you'll need to draw your deposit. So if you had 20 million in capital, then you'll need 200 million in deposits in order to make, if you had 200 million in deposits, you could make 180 million in loans. So of course you're going to draft up your charter and make sure that you have all sorts of protections so that you can't have corruption, so that you are giving out loans fairly and equitably. You know, so you'll have a long charter that has all your rules and regulations in it. Then you can start making loans then immediately, as long as you've got deposits. You would pull your deposits out of your public, it'd be public revenues that you would deposit in the bank. So, and then you just go, just like an ordinary bank. Anybody can set up a bank. It's legal for anyone to set up a bank. You just follow the rules and get a charter.
And let me, if I may, I'd like to add to that too. In our advising and our consulting with cities and counties and states, we basically look at wanting to get the institution on a firm footing. So one of the things you don't do is make risky loans. You don't get into some of the more new kind of investments that you're anxious to make. But rather you look at refinancing some of your own debt. So you can lower the debt that the city, the municipality is carrying, perhaps and probably, by creating a loan to retire some of that bond debt, which let's say might be at 5%, but your community bank or your public bank could make it at 2%. So the bank then is lending money to itself, or I'm sorry, the community is lending money to itself, saving money over what it would be paying, and paying the interest to itself. So it's not only, it's got a very stable and a safe sort of a client. You pretty much know where the client lives because it's your community, and of course then, and you know you budgeted the interest payment, so you know you've got a paying client. So you're off to a pretty good start, and with that, then after a year or two, you start to to work out the bugs and establish the precedents and the policies and the operation of the staff, and you should be on your way. Now one of the things that's important about this is a public bank is not a charity. It's not a lender of last resort. It's not even a development corporation. It's a bank that operates on commercial principles, intending to make a small profit so that it can continue to grow. But it's not going to be out on the edges of lending, because that is a sure sign of disaster, as well as giving the political and special interests a voice in the process.
That's really important. It's a reminder that this is not some charity function or something that's way out there. It's a well-run business, but a business in the public interest. Let me ask one of you to talk a little bit about existing banks. I think it's a surprise to a lot of people that existing banks are such a large portion of the problem. And I recommend that people go to the publicbankinginstitute.org and read the articles and resources that are on the website, because it gives you some sense of what the role of banks is. But Ellen, can you tell us, how did it happen, after you unmute yourself, how did it happen that private banks came to play this role of dominance that I think a lot of us aren't even aware of?
Well, you have to go all the way back to the founding of the country. We won the Revolutionary War by just printing money. That's where the money came from. I mean, Benjamin Franklin said it was an amazing thing that we won this war without really having any money. We just printed the money. But the problem was, of course, it wasn't considered as valuable as gold, and it wound up being totally hyperinflated by the end of the war. So everybody was so afraid of paper money that the founding fathers were afraid to put it in the Constitution. So the Constitution doesn't say anything about who has the power to print money. It just says Congress shall have the power to coin money and regulate the value thereof. And at that time, coins were the official currency. And by 1850, coins were 50% of the currency. So it was still a fair amount of government issued money. But by 1913, well, so the banks filled in. We needed more currency. We needed more available credit. And so the banks issued 10 times as many banknotes as they had gold. That was the beginning of our whole fractional reserve system. And that worked pretty well, but we had, whenever the customers got suspicious and you had a bank run, then you would have chaos in the economy. So in 1913, they set up the Federal Reserve, which was supposed to be something different than what it was. It was a huge populist movement that got the Federal Reserve set up, but what they got was not what they intended. They got something run by bankers for bankers. So we have a system today where banks actually create our money, but our whole economic model is wrong. They don't
Okay, so let's just pause there because we want to have that as a separate segment. What you're proposing with the Public Banking Institute is not just a small change of detail or a little appendage to the existing system. You are consciously challenging the fundamental economic principles of the United States today. Can you say what at the fundamental level is the change that PBI envisions or that your work implies?
Well, I guess there are several levels of change. The simple thing to do is to set up banks like the Bank of North Dakota. We've already got such a bank. We've got a model. We can just follow the model. But ideally, overall, what I would envision is a national public banking system where the currency is issued by the government digitally. But first, we have to recapture our central bank. We don't want our current bank-run central bank in control. But assuming we had a true national bank of the sort that we did have, for example, in the 1940s under Mariner Eccles, and that other countries have had at different times, that actually was there to serve the interests of the economy and the public, that bank could then issue currency that so everybody would have a deposit at that bank. You would, in effect, become your own banker. If you look at Bitcoin, for example, there really is no central authority. Everybody is their own banker. You do your own trades, but I would envision that you could also do your own loans. In other words, you're just taking out credit against your own future promise to pay, which is what we have right now, that banks actually do, just monetize or turn into money your own promise to pay. That's what the function of a bank is.
Mm-hmm. So that's helpful. Walt, could you speak just a little bit about how what Ellen is describing really means a change in the very way that our present economic system works?
Yeah, I think it's a really important question because one of the things what's changing in our reality is that the disparity between the haves and the have-nots prevent most of the people on the planet from getting ahead. And one of the things that we see, that we know, is that credit is the lifeblood of the economy, but it's also something deeper. It's about relationship between people. It's about what we invest in that's important. What are our priorities? How do we protect one another? So that money, and I think Ellen has done a big service by being able to recharacterize money from as just a commodity into a utility. It's a utility like water and electricity and, and the sort of things that we all count on. And so it should be available to people, and it's not scarce. There's no, so the context in which people perceive money is that it's limited, it's scarce, there's not enough, and therefore we're stuck, we're trapped in this web of debt. And that's literally the shift in the framework. We're coming into an age now where people and utility and the needs of humanity need to be served by the very clever resource of money. And once we turn it into a utility by being able to make it more accessible for people, we can start to turn the corner about how humanity is able to move forward in its civilized posture.
Walt, in your answer, you start to point out what this movement toward public banking implies as we reconceive other sectors of society as well. And as we move to our last few minutes, I wonder if one of you could describe what it would mean to take the public banking model and to begin to apply it in the sector of agriculture or transportation or education, it seems to me that especially that notion of money becoming a utility has huge implications for how we design a society as a whole.
I would just offer that I think that we're coming into a day and an age when the needs of humanity, the evolution of our general community, requires a different relationship between us. We can't go around profiting at each other's expense. And when that regime is brought down, or at least maybe not brought down, but altered, so that we have new ways of interacting, and we have an age of acknowledged interdependency, then our systems will reflect and need to reflect that. And then I think we'll be able to humanize our economy. The new economy needs to reflect new values. And that, I think, is what the public banking opportunity affords. It'll be up, of course, to all of us to determine and to insist and make sure that the integrity of that opportunity is retained.
Mm-hmm.
Okay, I would add that right now, everybody knows that we need infrastructure, that Democrats and Republicans agree, but they can't agree on where to get the money. We don't have the money. But once you realize that money is just credit and it's created by banks all the time, you can have a bank, a public bank, that creates the credit as needed for your infrastructure. Another thing that people are realizing is that at sometime in the near future, something like 80% of jobs are going to be replaced by mechanization. So how are you going to feed those 80%? You can't do it by welfare, because you've only got 20% earning a living to support the other 80%. But you could, let's say you had a digital currency issued by the government, and that was your whole currency, you could very easily just put $1,000 a month on everybody's card, their debit card, every month, and that would put the demand into the economy, and then that would drive the jobs. And in order to, anyway, I've written a lot about that, but you can balance it out so it doesn't come out to be.
Yeah, that's beautiful. What I think I hear in your concept, in this concept, is a way of reconceiving each sector of society, so that transportation might be set up for the common good rather than for individual profit. That obviously banking, that agriculture might not be run by agribusiness for profit, but in a way that profits the people actually doing the work. And likewise for every other sector that we could talk about. It sounds to me a lot like the famous concept from John Cobb, for the common good. And in closing, I wonder if each of you could say for a moment how these innovations, which we understand in this sector, could become a model of entire society or country or global system for the common good. If you just dream of where it points, what could you say in closing about where you see that arrow pointing? So Ellen's going to unmute, and then Walt.
Okay, so I could envision a system where money is just a flow. It's one big system of money. Everybody worries about a global currency, because the question is who's going to issue it, and then you think it's going to empower dictators or something like that. But picture a global currency that's more like Bitcoin, where everybody is creating money, just like a community currency, where you create the money when you do something for someone else, or when you if one person does something for the other person. So you've got a credit out there that hasn't been satisfied, so that is money that can then be spent in the whole system. So if you picture something like Craigslist or Amazon, or just a huge marketplace that is computerized, and a huge money system that is computerized, and you're basically doing your trades in that system. I mean, trades are easy to do. There already are big trading systems that are computerized. The hard thing is loans. How do you get credit when you don't yet have something to trade, and somebody's got to trust you to come up with the money? But this can be done in the same way that banks issue loans now. You can now build smart contracts into your digital currency that actually execute the contract. In other words, they make sure that you pay every month, and if you don't, then whatever, you get flagged for foreclosure. Just like happens now. It could all be computerized, and objective and according to formula, so that you don't have individuals in there doing crony pork type exchanges.
So Walt, how would you phrase the ways in which this innovation lead us toward a society that's constructed for the common good?
Well, what we see now is that politics speaks for the moneyed interests. And what's pretty clear is that the people don't have the money, and therefore the politics don't reflect the public interest. So the possibilities of what we can create as community or as individuals is limited by that constraint of you don't have any go, you can't go anywhere. And I think that the systems that we have now can morph or transform into something, as Ellen was saying, really provides a new level of security and stability. This is not to say that there wouldn't be incentives or gradations of people living different lifestyles, but at least we could work toward having a bottom line, a basic sort of interdependency and reliance that would respect the social contract, and most especially respect our democratic intentions and desires. I mean, until we gather some monetary control, reclaim the control, the sovereign control that we should have as citizens, we're always going to be neo-serfs. We're going to be in a neo-feudal kind of a situation where we will struggle and wait and suffer, frankly, and we have to get past that. So part of this effort with public banking is to democratize our money, to be able to put people above profit, to make the people and the planet above the profit, so that we have some sense of a sustainable, promising, delightful prospect for humanity, which I think we're all entitled to.
You guys have done a beautiful job of taking the details of public banking from the base questions of how to begin a public bank all the way up to the societal implications across multiple sectors of society as we head toward a more sustainable way of living on this planet. A ton of information is available on publicbankinginstitute.org. Which is enough to give people a full picture of where this points. And I also recommend ellenbrown.com, which includes a number of blogs and now even video tapes that show you exactly what the theory is and the practice is of public banking. Thank you, Ellen, and thank you, Walt, very much for joining us today on the show.